With investing, I spoke about not trying to predict the market and just taking advantage of discipline and emotional control. So I'm not trying to guess if Ethereum's going to win, if Solana's going to win, or BNB's going to win. I'm just trying to match the performance of the market.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where sideways is just another word for emotional damage. I'm your host, Jay Hamilton. It's Wednesday, November the 12th. Crypto continues to chop. Bitcoin did bounce off its 50-week moving average, which was a good sign. BlackRock's IBIT took in its highest single day inflow ever for Bitcoin, the 224 million they took in just the other day. Today, to break it all down and talk about this sideways market and where the opportunity is, and if we are still in a bull or if we're in a bear, and where we go from here, is the one and only Koroush AK. He's made millions as a crypto trader for the past 8 years. He also founded Zero Complexity Trading, where he's taught hundreds of people to become profitable crypto traders. Before we jump in and hear from Koroush, I'm super excited to tell you guys some big news. The Milk Road universe just got bigger. We've launched Milk Road AI, which is a new podcast where we talk to the builders behind the AI boom, the ones creating the picks and the shovels, powering it all. Now, in these podcasts, which come out, the first one came out today, and the next one comes out Friday. It'll be every Wednesday and Friday. We are going to teach you how to invest in AI. This is not a podcast about how to use AI. This is a podcast how to invest in AI. Episode 1 is already out with Mike Novogratz, the CEO of Galaxy. Check it out. Subscribe to Milk Road AI on YouTube and join the AI newsletter waitlist. Links are all in the show notes. Today's episode is brought to you by the Gemini Credit Card. Turn your everyday spending into Bitcoin. It's also brought to you by BlockTrust IRA. Let AI outsmart the market and grow your crypto while you sleep. And finally, by Figure Markets. Earn solid returns on your cash because nothing sitting idle is a strategy. With that, Koroush, welcome to the Milk Road Show.
Hey Jay, pleasure to be here.
Pleasure to have you, my man. Okay, let's start. This is your first time on the show, and I always like to just start with, what's your perspective on the current market? What are you thinking here sitting Q4, November 12th, 2025? What's your view as you sit from your seat today?
It's crazy how different my view is to actually just turned 9 years, like a few weeks ago, that I've been in the space, and it's a completely different market. And the stuff people used to do to succeed in the market has changed quite a lot. My perspective right now is that we're dealing with a macro, much more mature market with far more sophisticated players. The easy money is gone, which is a common narrative, but with easy money being gone, stable, secure money is there. And more stable, more secure money is far more valuable. Like risk adjusted, I actually think we're in the best position we've ever been to capitalize on crypto.
Very interesting. It's very easy to, I think a lot of our listeners and a lot of people feel the sentiment that the easy money is gone. I think everybody sees that. It's just the cycle has not been the same as it has been in the past, and there is certainly not a everything goes up. We haven't seen that at all this cycle. This cycle has had phases. We've had phases where Bitcoin has had the narrative. We've had phases where even meme coins, it seems like forever ago, but a year ago, remember how much meme coins, and then AI agents had the narrative. And so there's been all these narratives, but there certainly hasn't been that altcoin season where everything goes up. Do you think that is done? Like, will we ever see that again?
Well, I actually saw a tweet today, and I haven't fact-checked it, but I think generally it's pretty correct. In 2017, there were thousands of coins. In 2021, there was like maybe 10,000 plus, maybe 100,000. Now, there's 11 million plus coins. How is everything ever going to go up together again? Just mathematically.
Yeah, it's not possible. It's not possible. Now, go ahead.
I can add to that I also, and on the topic of easy money, I don't like easy money at all. And as a concept, it's people only look at the fact that you can make a lot of money quickly, but they don't look at all the negative drawbacks that come with easy money. If the money's easy to get, anyone can get it with really low effort. And if anyone can get it with really low effort, everyone's going to try and get it with really low effort. So the opportunity by nature disappears really quickly. Not only that, but because it's such a short-term opportunity, it doesn't train long-term habits. And by getting rewarded for your short-term habits and making money quickly, you're actually creating a flawed model that over time is going to cost you a ton of money. Because if the money comes really easily, you don't respect it, you don't know how to protect it, you don't know how to keep it, and also you haven't really earned it. So if you haven't earned it, and this is something I say a lot, it comes with a crippling anxiety that if I lose this, I'm never going to be able to make it back again. I'd rather make difficult earned money, or actually not even difficult, I'd rather make normal earned money that I know I can repeat and continually make for a long period of time. In 2017, I made easy money. That was my first bull market. I came in with 500 and purely through gambling, this is not a testament to my skill, took that to over $1 million. Then I lost 400K, came down to 800K, and then that was it. I had no ability to make that money again, and I was blessed to make that much, but so much anxiety. If I ever lost that 800K, how could I ever make it back again? Wealth isn't just a bank number. It's also the confidence in yourself to make that money again. And more important than having 800K or 10 million, 20 million is the confidence that you as a person have the skill to make that money. And if you have that skill to make that money, then that's where the true wealth comes, at least in my experience.
Mm-hmm. When you look at the market right now, do you frame the market as being in a bull run or a bear market? And just give us your thesis right now on how you look at it. And maybe we should start with Bitcoin, because it's easier to speak about one asset than it is to speak about them all at once.
Absolutely. So the bull and bear market terminology is meaningless at this point. Everyone uses it in their own way and completely differently. Firstly, we need to categorize what we're trying to do, because bull bear market is just a perspective that's supposed to help us make more money. Now, if we're investors, we're going to look at that in one way. If we are traders, we're going to look at that in a completely different way. So as investors, and let's start there, it's really important to separate trading from that entirely. And a lot of people who label themselves investors sit in this awkward middle ground where they call it investing because they're willing to bag hold, but really it's just trading really loosely, buying and selling assets off vague theories, trying to make money. And you could get away with that, like we said, back in 2017 when it was a lot easier. Now it's competitive and you need an edge in the market. So if you are going to approach the market as an investor, why don't you take the easiest edge you possibly can? And that is discipline and willpower. If you just are disciplined and you control your emotions, that is a huge edge that will always beat the majority of investors. So how do we do that? Well, we take the emotional decision making out of the picture and we go purely long-term plays. Now, with the stock market, you see this as just buying index funds. And there's a few different ways you can increase the returns you get on those. Number one, you remove timing risk. So you just dollar cost average in. Number two, you periodically rebalance your portfolio. So you don't just hold the stock market. You have a couple other assets. It doesn't actually matter which ones, as long as they've been at least around for 50 plus, ideally hundreds of years. Like it could be gold, it could be cash, it could be bonds, just anything that's established. And then you rebalance between these. So we can use crypto to our advantage and incorporate it as investors into this diversified portfolio really effectively now. And it's not a risky play anymore. Back when it was easy money, it was really hard to do this. We couldn't incorporate it. We actually were forced to trade. And most people aren't suited for trading. And I say this as someone who teaches people to trade. Most people aren't suited for it. You actually really have to want to do it and have some sort of edge there. So with investing, now that it's established, now that we see people like Ray Dalio saying it's actually justifiable to have 15% of your portfolio in gold and Bitcoin combined, cool, we can start adding some crypto to our portfolio. So the way I look at it as an investor is, firstly, I take the index approach from the stock market to the crypto market. How do we do that? Well, the index is weighted to market cap of the asset. And in crypto, I do that, but exponentially. So say in the stock market, you do it proportionally based on, so if we have 5 shares of Apple, 2 shares of Google, 3 shares of OpenAI, that's just random countries. Imagine that's the entire market. You would split that based on the proportionality of it. With the crypto market, if we have 5 shares of Bitcoin in the total market, 50% is Bitcoin, I would actually go 80% Bitcoin. Why? Because I'm disproportionately weighting towards the largest market caps. And that just puts you as Bitcoin being the majority of your portfolio when you end up doing that. So I personally hold 90% of my total crypto portfolio in Bitcoin for that reason. And that goes up to 95 sometimes even. Then the remaining 10% will be split between altcoins that have really established themselves. I have Solana in there, Ethereum, BNB, and that's actually it for altcoins that I actually like in that remaining 10%. Then we incorporate this as a part of the wider portfolio, including stocks and whatever other assets you like. You can keep it really simple. You really don't need that many. Crypto, stocks, and cash for most people is more than enough. So then to look at what percentage should be weighted towards Bitcoin. I personally go for 15% total net worth in crypto. And the reason I like that much isn't actually because I think it's optimal for returns. At this point, my goal is capital preservation. And then the natural question comes, then why is your Bitcoin higher? Surely it's the riskier asset. Well, preservation isn't only about returns. It's also about sovereignty. And for me, that sovereignty is highly, highly valuable. The fact that no one can freeze my Bitcoin account, no one can take that from me, or they can, but it's very, very difficult, especially if you have high security measures. That's why I like Bitcoin and my allocations.
Mm-hmm. So just to be clear here, so your crypto portfolio is mostly Bitcoin, 90% Bitcoin. But where does your trading portfolio fit within this?
Great question. So this is where we need to separate the investing and the trading. Investing, these are purely long-term. I do not touch them. I DCA. I buy on really big, disproportionate dips, and then everything else just passively rebalances with quarterly checks of like, okay, maybe I'll move this up 1%, this down 1%, but they're tiny, minuscule changes. With trading, it's nothing to do with investing. Trading's like building a business. You're building a business and you're spotting a gap in the market and you're trying to make money from that gap in the market. So when I have my trading portfolio, that is the exact same as you investing 500 grand into Milk Road. If you put 500 grand into Milk Road, you're not like investing like you would buy an asset. You're actually putting money into something you're then going to put your time in to try disproportionately outperform any sort of investing returns. When it comes to my trading, I need to outperform the crypto market in general by a lot. Otherwise, why am I putting extra time in to make less money with arguably more risk? With trading then, you need 3 things, and these 3 things together can make you profit. You need an edge, so some sort of advantage over the rest of the market. You need the ability to execute on that edge. That's good psychology and a good routine attached to it. And then lastly, you need the risk management involved as well. So you need sufficient risk management to make sure you don't lose the money. So that's how I view trading.
Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini. Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic sell or hope, a select few leverage a crucial edge: AI. BlockTrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by 250%. Visit milkroad.com/BlockTrustIRA today to get up to $2,500 in bonus crypto and transform your investment strategy. So if we look at Bitcoin, right now from a technical standpoint. What's your view on Bitcoin? Do you think we go up from here? There's many people who come on the show who, and I'm not asking you to necessarily make predictions. I'm more so just trying to understand the way you see it going from here, because I know predictions are, as worth as much as as each one of our opinions. But a lot of people come on the show and still believe we are in a bull market. Caveat what you said earlier, that this is everybody's opinion. What a bull market is varies greatly. Yeah. And that Bitcoin is going to go higher, and that it still has a lot of room to run and even a lot of people saying that it could get quite a bit higher by the end of the year. What's your take on Bitcoin right now?
As an investor, and I'm going to separate for these answers. As an investor, my take is over the next 6+ years, it's going to go up. Anything that goes into my portfolio, I need confidence that it's going to go up over the next 6+, years. So I noticed you were a bit surprised. I was 90% Bitcoin.
Why 6 years? Why 6?
Because typically that's the period of time where you're almost guaranteed to get positive returns in the stock market. And the stock market is the majority of my portfolio. So I center everything around that when it comes to my long-term investing. So I go for the 6-year mark. And also it's a good definition for long-term investing and works for me as a heuristic. Then as an investor, I don't care if we go down to 20K. We could literally go down to 20K right now, and it would make zero difference to me, assuming there's no big fundamental shift like an AI computer speeds up quantum computing and we think Bitcoin's going to get hacked or something crazy like that. Then as a trader, okay, I've got a very different perspective. Every week, I'm turning from bull to bear, because when the market... As a trader, your job is to think in probabilities and place bets. Every time price does something, based on a journal I have full of trading data, I change my opinion as to what's most likely to happen next, and I'll place a bet on it. Sometimes I'm right, sometimes I'm wrong, and I make money from that. That's why my definition of bull or bear market is actually really nuanced based on my trading. It can be bullish, it can be bullish neutral, it can be neutral, it can be bearish neutral, it can be bearish. And all it takes is one key structural level to break for me to change my opinion on that. Me telling people what my view is on the market, or any guest of yours saying if it's a bull or bear market, is almost entirely useless to your audience. Because my definition is really useful to me, because when the market is extremely bullish, I know that certain setups become higher probability and higher EV. That means expected value for anyone who doesn't know. So if I place the trade, I'm more likely to make more money from it. My definitions are only useful for that. So me telling anyone, okay, we're bullish neutral right now, it's not really going to be useful for them. What they can do, though, is figure out, okay, so why do you think it's bullish neutral? How do you use the information that it's bullish neutral? And then they can build their own systems around that, not relying on any influences or other people's analysis.
Mm-hmm, mm-hmm. I still want to know what your Bitcoin perspective is. Is it bullish neutral? Is that it?
Right now, I'm so macro, I'm still bullish. But in the medium term, I'm bearish. You're bearish. If I'm going to bet, and bear in mind, this is like 70%, 60 to 70% that I think this is going to happen, is we go lower before we go higher and 100K breaks.
Why?
Simply because of the market structure right now. The 116K was a key structural level that I wanted to flip. That level did not flip, so the price action tells me it's bearish. Forgetting about discretion, fundamentals, everything. So chances are price will go down before it goes up. And the way my trading strategy works is I keep betting it goes down until I'm wrong. And then when I'm wrong and I lose that trade, or I manage to get out a little bit earlier and don't lose as bad, then I flip and start betting in the other direction. Most traders' money is made in the middle, not calling tops, not catching bottoms. Calling tops and catching bottoms is great for marketing.
Impossible.
People will love you, you'll get likes, you'll get retweets, but for making money, entirely useless. No one, and I used to run a podcast myself, interviewed 100 multimillionaire, billionaire traders. None of them made their wealth calling tops and bottoms.
Yeah, it's so true. It is very easy to get caught in that mindset, because that's, as you said, that is what gets you all the likes and all the virality on social media. And that's what the algorithms love too, because it's, it's incredible content to talk about
You
somebody.
need polarizing opinions. Those do best.
Yeah. Yeah. And you know the algorithm well. I mean, you've got a massive X following. So you understand how much that algorithm, and that obviously the way that algorithm works impacts the way all of our behavior operates, because that is what most of our news and our content comes from, is from reading that. So yeah, you got to be very careful with that. I want to go back to, you talked about how Bitcoin is your largest holding in your investment part of your portfolio, and then you have three others that make up the rest 10%. So that's Ethereum, Solana, and BNB. I want to ask, because you were telling me before we recorded that BNB was a new addition to that part of your portfolio. We talk lots about Ethereum and Solana on the show. We don't talk a ton about BNB. Why is BNB a new addition to your long-term hold portfolio? Why have you got long-term conviction in it now?
Okay, great question. 90% is BTC. And the reason I like 90% BTC, another one, is it's the lowest risk. And I've already got a lot of risk attached to the crypto market. So have you. We've both got our biggest businesses attached to the crypto market. So naturally, I need a bit less risk than other people. For others, you can actually go up to 75% BTC and then have Ethereum and Solana as the main ones. I personally just added BNB, small amount, for extra diversification within that reduced part of the portfolio. And it's actually even less than 10%. I just say 10% for a nice round number, closer to like 7. And the reason I added BNB and how BNB got added is as a trader, I get to watch assets come and go a lot. And I get to study narratives because I trade on lower time frames. That means every few days I'm in and out of positions. I see some coins come, I see them go, I watch them all the way up, all the way down intricately. And most narratives appear, and a definition for a narrative is just a coin that is an outlier performer and a story on social media attaches to that coin. So that's how I define a narrative. When these narratives come, normally they fade away and they don't return again. NFTs were a strong narrative and they disappeared. DeFi as a whole is still a great industry, but as a narrative, it's dead. Like, no one really cares that much about it anymore. AI was really, really, really hot, but it's trickled down now. It's not quite as big as it was. Specifically, the crypto coins as an industry, it's booming like crazy. Gaming coins, I can go on with regards to narratives that have just come and go. But one narrative that kept sticking around was BNB. It was like, in Spider-Man, you've got the Venom suit. It just kept latching on to new hosts and writing those narratives. In the DeFi boom, it was because there was so much DeFi on BNB, it became a DeFi narrative. It rode the exchange narrative again and again. It also rides the macro narrative of just being attached to the whole market. Because if the market does well, BNB is going to make money. Binance, the exchange, is going to make money. So the coin is going to do well. Anytime Steve posts or does anything or creates anything, BNB is attached to that, does well. It's proven to stick around. It's repeatedly shown up as a narrative. So for me, that's actually now a really strong coin that I want incorporated into my portfolio. It has a lot of hedge risk. It hedges a lot against my Ethereum and Solana bets. Plus, it's been around long enough to justify its position.
Talk to me about a little bit about that. It's hedging against your Ethereum and Solana bets. Dive deep into that a little bit more.
With investing, I spoke about not trying to predict the market and just taking advantage of discipline and emotional control. So I'm not trying to guess if Ethereum's going to win, if Solana's going to win, or BNB is going to win. I'm just trying to match the performance of the market. If tomorrow Ethereum's market cap gets bigger than Bitcoin's, I'm going to swap. I'm just going to move the Bitcoin into Ethereum gradually as those market caps shift. I'm just trying to match the performance of the market. That's my investor mindset. I'm not trying to be clever or a genius. My only edge with investing is some good base hypothesis, which I've explained, and then emotional control and discipline with my investing. So the hedge is just, okay, this asset has repeatedly done well. It has a bunch of narratives attached to it. Therefore, it also has a large enough market cap to be in the top 10. Therefore, this now justifies its position in with the rest of my assets. A natural follow-on question might be, why is Doge not up there? That's been around for a while. It's shown consistent performance. And this is where, personally, I do not believe in it. I have not seen enough evidence for me to be able to emotionally hold that through ups and downs. And investing is also an emotional game, because I need to make it easy for myself to stick to my rules. And if you vehemently believe in Doge and you really think that that is as good as BTC, Sol, Ethereum, and it absolutely justifies its place there, and you have some maths to back it up, performance over the last X years, number of times it's come back as a narrative, okay, cool, incorporate it in your long-term portfolio, make sure it's a tiny percentage like BNB is for me, and then it can go in.
Yeah, I wouldn't ask the why not Doge question because it's not in my portfolio either, and I don't think it's going to be in many portfolios of our listeners. The one I would ask is why not XRP? I'm not an XRP holder, so I'll be straight with that. Not, and my gut says that our audience is not. Although feel free to yell at me in the comments if you guys are all XRP holders. But XRP just being the bigger asset feels like the one. And it's not, Doge is a meme coin, right? Like, yeah, I know you don't necessarily, as a technical trader, you don't focus so much on fundamentals, but it's tough when you have zero fundamentals. That makes it very tough to believe in. So why not XRP?
So a few reasons for XRP. Firstly, XRP is notoriously, I've got 3 primary systems I run with my trading, and on every single one of them, can't make money on XRP. Like, something about that asset, I do terribly on it. There's some assets like Doge where sometimes I do terribly, sometimes I do well trading it. With XRP, I've just historically done terribly trading it. So emotionally, I have a horrible relationship with that asset. I don't want to own it. I don't want to touch it. Every time I do, I lose money with it. Sure, I could potentially justify owning it in my portfolio if I dive deeper into the fundamentals, bought the fundamentals myself, and then I could justify it. It's got the market cap. It doesn't really run on narratives. It more just trails along with the market and occasionally has moments for itself. So yeah, it doesn't really fit the recurring narratives, good relationship, me believing in it, having that base hypothesis for it to go in. So XRP's never entered.
Is there a reason why? Like,
weird price action. It's extremely choppy. It doesn't have clean trends. It often pumps, comes down, goes sideways for ages. Does it like choppy movements up and down, pumps again, comes down, goes sideways for ages. And I'm a momentum trader, so most of my money is clean, consistent, level to level trends. That's where I print, and XRP never does that.
Interesting. Okay, what about ETH and Solana? Before we wrap up here, ETH and Solana being a big part of your holdings as well. Let's talk about them more so from an investor perspective. Maybe we do ETH first and Solana second. Sure. Well, let me ask you this actually: why hold both? Why are both of them a part of your portfolio?
So first, it was BTC and ETH. Initially, Solana was added the same way BNB was added. Enough narratives, enough strength, been around long enough, continually went up. At first, it was just BTC and Ethereum. Why just those two? Because they'd been around the longest. They were the only ones that actually stayed in the top 10 long enough, and I could back them because arguably XRP's been in there long enough as well. So has Doge even. But those two were the only ones I could get behind. BTC, I don't need to explain the fundamentals to your audience. Ethereum has a bit of extra utility and actually can hedge against the BTC bet, and I can calculate it based on market cap. So Ethereum market cap grows, proportion of that grows. Then Solana comes in because, again, having 3 different assets adds another hedge in. Solana's got most of the same arguments Ethereum does, plus but it's newer and it's a smaller market cap. So I'm going to have more Ethereum than I do Solana. And that is it. I am not a fundamentals expert. I'm not trying to guess what's happening. It's mostly market cap plus can I believe in the hypothesis? That's it.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. So, do you think Ethereum and Solana will hit all-time highs in the next year? Like, I want a short time frame here. I want to ask in the next few months, but that's a very, very short time frame, because there certainly is a feeling in the market right now of extreme fear, right? Particularly in the crypto market, when we're seeing so many of, Bitcoin's hit all-time highs this cycle. Yeah. And we've had new coins that have done well in this cycle. But a lot of the older coins, particularly the smart contract platforms, which we all, from a fundamental perspective, believe is where the future of finance will be built, have not that they've done poorly this cycle. I mean, Solana was down at $8 after post FTX. So, I mean, if you bought it then, it's done incredibly well. But Ethereum has certainly not had the run that everybody would hope it would have in this cycle. You still bullish on them reaching all-time highs and continuing to grow?
Rather than what I say, we can just look at where my money is. I'm about 9 times more bullish on Bitcoin over the next 6 years, hitting its all-time highs, than Ethereum and Solana. And I know you asked short term, what are we thinking next year or two? And what use is my opinion there? Because, and this is really important for any guest that comes on, like, look at where their money is. I've got bets on what's happening, and I make bets on what's happening over the next week. So if I give you guys an opinion on, hey, what I think is going to happen over the next year, it's just going to be fun to listen to, but I don't have money behind that. So what use would that opinion be?
Interesting. Yeah, very interesting take. Okay, let's talk about any trades you like right now. Can you give us any edge, any alpha that you can share with us?
Yeah, absolutely. So the main alpha I'd share is like pre-sharing alpha. Make sure you have a system. Me telling you guys what to buy will not help you. You need a set of rules that you follow for your trading. You need a journal that you put those in, and then you need a sample size of data telling you you're a profitable trader before you start taking any trades. Use what I share to reverse engineer and build your own strategies rather than just copy them. That being said, we can talk about what I really like right now, and that is the privacy coin narrative. It's been popping, and it's, as a trader in this more bearish market, I said I'm looking at bearish neutral right now. It means liquidity is really low. And since the October 10th crash, people have been scared to touch altcoins. Liquidity has been absolutely terrible. So you actually can use this to your advantage. It means there's very scarce attention. And when an asset gets really hyped, it outperforms more than people normally think it does. We had BNB go crazy for a while. As C's became main character, BNB became the narrative. Then it followed on with Asta, I believe. And then before that, we actually had hype. So the narrative was hype, Asta. Then it became BNB. Then Asta came out on BNB, which is similar to hype. So that did really well. Then attention moved back to BNB. And if you track this, it was so obvious in real time because there's no other coins people are talking about right now. You and me were talking about before this how quiet everything is right now, which means the few coins that people do talk about go crazy. So what people were talking about right now and are still talking about is Zcash. The main coin to, if you are trading larger coins, is going to be Zcash. And following this narrative, other coins that are similar will start to do well. Make a list of privacy coins. Set alerts on those privacy coins. Take a look at what Monero did recently. It also did a 2x, and now it's coming back down, and the setup got quite ugly because liquidity got sucked out on the Zcash. But that would be the main thing. Look for narratives, what people are talking about, study the price action and behavior, then apply your trading strategy to those. I know that's not a go buy Zcash right now type answer, but I do believe this is the most value I can give to the
For sure.
listeners.
And obviously, I mean, Zcash is, if you look at the chart here, I can pull up the chart quickly, but just looking at it, like it's just parabolic, like it's insane,
Yeah.
which makes me think like you missed the move, right? Like too late to buy. Are you still feeling bullish on Zcash even at these very high prices?
So I've heard that so many times so when I first started talking about Zcash 2-3 weeks ago, everyone was telling me it's too late, I've missed the boat, because it already done like a 2x or something. But that is not how trends in crypto behave. Your job isn't just to buy and then never sell it. Your job is to, what I like to say, buy high and then sell higher on the assets. That's where the trading comes in. You know what point you want to buy at, you know when you want to exit because you've got risk management in place, and then you know exactly when to sell. And this is the perfect example right now. As you can see, price coming down. This is ideal for mean reversion longs. One of the strategies I use and teach as well is first you use momentum. So you long on the way up. Then when price starts coming down, if we open it up on TradingView, it never goes down in a straight line. It bounces constantly. And most people are really greedy. They like to think, okay, I'm just going to buy and wait for it to 2x again. So what does your edge become? We bring some emotional control in and we just sell with quick scalps using mean reversion longs. And that's a trading strategy that you can use on these assets. When I say Zcash is where I'm focused, that doesn't mean I think it's going to continue going up forever or even make another all-time high. It just means that's where volume is, that's where liquidity is, and in a drought of a market right now, that's where you can make money.
Why is privacy getting such a narrative right now?
I couldn't tell you why, actually. It's what people latch onto. Different narratives take hold and then get pushed. You could argue it's people manipulating the news and people's attention. So it could be manufactured entirely, and that is very, very possible. It could just be right time, right place. Either's possible.
Yeah, I see why privacy can get the narrative in the long term. It's interesting that it has the narrative right now, but I think that the reason it has the narrative right now is because something has to have the narrative, to be honest. And
that's the best.
It's one of the ones that's available to have the narrative.
The Naval tweet,
right?
actually, what kicked everything off was that tweet from Naval about Zcash. And from that point, did everyone manufacture attention going towards Zcash, or was it organic? No idea. But does it really matter? Our job is just to make money from it.
Yeah, true that. So for those listening who want to try their hand in trading, tell us where they can learn more from you in your zero complexity trading course.
Sweet. So thank you, Jay. It's been a pleasure talking. If you go on my Twitter bio and just click on the link in the description, I've got a full free course with everything you need to learn to trade. If you want to see if trading's for you and you want to build your own strategy, it's the best place to go. And what we share is actually proven to consistently generate verifiably profitable strategies. Most content you see on trading on the internet is just people drawing lines on charts. So like, I can't stress how much, if you don't want to waste your time, you should use proven content, and ours is proven.
Let me ask this. How much time should somebody have to dedicate to trading before they decide to go into trading? And I ask this because I think that a lot of people are a bit rose-colored glasses, like, oh, I can do this, right? I've seen so many people on crypto Twitter do it, like, why can't I do it? And you said earlier you compared trading to running a business, to a full-time job, and I think that is an apt comparison. So what would be how much time would somebody need to have in order to really make it work as a trader?
Question, and something everyone should ask themselves. I'll just throw it back at you really quick. How much time do you think someone should spend if they want a part-time income from a side hustle business? 5 times a week, how much time should they put in a day?
It's like 2 hours at least, I would say.
Perfect. That's exactly it. It is 2 hours. That's the exact metric we go by. So we've done this with hundreds of traders, and 2 hours, 5 times a week is the minimum. That doesn't mean 10 hours on a Saturday. It means 2 hours, 5 times a week. Because of the nature of the market, you just can't cram it all. You need to get that constant exposure every day.
Okay. So if you want to become a trader, make sure you have 2 hours, make sure you have 10 hours a week split up over the week. And if you have that time and you're ready to dedicate that time, then go check out Koroush's course, free course. We'll put the link in the show notes. Koroush, thanks so much for joining us today.
Jay, it's been a pleasure.
Thanks so much for tuning in, y'all. Got to remind you, as always, none of today's episode is financial advice. I'm not your financial advisor. Koroush is not your financial advisor. If you need help with your investments, you should speak to a professional. Today's episode is for entertainment and educational purposes only. And as I told you at the beginning, Milk Road AI just launched our new podcast all about how to invest in the opportunity around AI. So if you haven't already done so, click the link in the show notes and go check that out. Have a wicked awesome day, y'all. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.